You did it again. You clicked on a video where a guy in a rented suit talks about the magic of compound interest. He draws a line where your $200 a month turns into $1 million in 40 years. Let's run a quick forensic audit on that lie. First, inflation. Over the last 40 years, the dollar has lost 75% of its purchasing power. Your future million is basically the price of a used Toyota Prius today. Second, taxes. Unless you're utilizing complex structures, the state will seize 15 to 40% of your gains the moment you touch them. Third, counterparty risk. Brokers fail, banks collapse, and the rules of the game change faster than you can read a terms of service update. Hi, I'm Kyle. I'm your mirror. In a world where financial literacy is reduced to don't buy lattes, buy stocks. Today we're not talking about motivation. We're talking about derivatives, interest rate spreads, expected value, and the hierarchy of capital. I'm going to show you the 7 levels of investing they never tell you about. Because if you understood them, the financial advisory industry would lose 90% of its revenue overnight. This is level 1 Kyle. He has $2,000 in a quotes account earning 5% interest. He feels like an investor. But Kyle also has credit card debt at 22% annual percentage rate. Mathematically, Kyle is generating a net loss of 17% per year on his own capital. This is negative arbitrage. No asset in the world, not Bitcoin, not Tesla, offers a guaranteed 22% return with zero risk. But paying off that debt does exactly that. Level 1 is not about profit. It is about a forensic audit of your lifestyle. If the cost of servicing your liabilities is higher than the risk-free rate, any other investment is a financial hallucination. You are not an investor. You are a donor for the banking system. Your first investment is buying back your own debt. It is a 100% guaranteed, tax-free return on investment. Most of you are Henrys, high earners, not rich yet. You earn $5,000, $10,000, or $15,000 a month. But at the end of the month, your balance is a statistical error. You try to invest these crumbs into the stock market, hoping for 8% returns. Let us calculate the derivative of your time. If Kyle invests $5,000 in the Standard & Poor's 500, he makes $400 in a year. If Kyle invests those same $5,000 into a professional certification in systems architecture or United States tax law, his lifetime value as a professional skyrockets as a salary bump from $60,000 to $90,000, creates $30,000 in additional annual cash flow. That is a 600% annual return on invested capital. Compare $400 versus $30,000. Until your liquid capital exceeds your annual income, the best asset you have is your ability to generate cash flow. We look for multipliers for our own intellect. Most people invest linearly, risking $1 just to make 10 cents. That is a strategy for people who already have millions, but for the rest of us, it is a dead end. Level 3 is game theory, where we look for asymmetric bets. These are situations where your downside risk is strictly capped, but the potential upside is infinite. Instead of buying safe bonds, Kyle spends his capital testing 10 different micro-projects. 9 of them will fail, costing him exactly $500 each. But one single project goes viral, or finds a perfect market fit, bringing in $50,000. This is the power of mathematical expected value. We do not try to guess the winner. We simply buy as many cheap tickets to the future as our bankroll allows. One 10,000% win erases 100 controlled losses. At level 4, we stop playing as individuals. An individual is the worst tax structure ever invented. You pay taxes on what you earn and live on what is left. A corporate structure allows Kyle to invest in growth first. It covers expenses second and pays taxes only on the net profit that remains after all maneuvers. If you live in a low-cost jurisdiction while earning in a high-value currency, your arbitrage is the gap between your cost of living and your purchasing power. This is multiplied by regulatory optimization, like a Delaware limited liability company or a specialized tax vehicle. Reducing your tax burden from 30% to 5% is an immediate 25% return on your entire capital with zero market risk. This is what separates an amateur from someone who understands the regulatory landscape. The money you did not give to the state is your easiest money. Do you think you own the stocks in your app? Run an audit. Most brokers use your assets for rehypothecation. They pledge your assets to finance their own operations. If the broker fails, you are just another unsecured creditor in a long line. Level 5 is about understanding the pipes of the financial system. A professional Kyle does not just buy an asset. He looks at the custody. He uses debt not to buy more stocks, but to unlock liquidity without selling the asset, avoiding capital gains tax entirely. It is the buy, borrow, die strategy. You buy assets, borrow against them at low rates for your lifestyle, and never sell. Your debts are eroded by inflation, while your assets grow. This is where debt becomes a tool for wealth, not a chain around your neck. Here, investing turns into history and geography. Most investors look at yesterday's charts. A level 6 Kyle looks at demographics, energy scarcity, and defense budgets. If the world is moving from globalization to local power blocks, your world index is a bet on the past. We invest in scarcity. Semiconductor shortage? We are there. Freshwater scarcity? We are there. Security deficit? We buy the defense sector. This is where 1% of correct positioning in a macro trend yields more than 20 years of passive saving. We do not swim against the current. We watch where the central banks point their liquidity flamethrowers, and we stand there with a very large bucket. We are at the top. Level 7. There are no investments here. There is only ownership of the rules. The wealthiest people in the world do not buy stocks. They issue them. They do not take loans. They create banks. Seigniorage is the profit made by issuing currency or creating ecosystems where others are forced to use your infrastructure. When you own the platform where millions of other Kyles are trying to navigate level 1 and 2, you have won the game. Your success here is not measured in percentages. It is measured by your degree of autonomy from the very systems you just mastered. You become a sovereign player who defines what value is. You can stay at the guru level and wait 40 years for your Prius. Or you can start a forensic audit of your life right now. Start by killing negative arbitrage. Capitalize your own mind and seek asymmetry. Build structures instead of just buying papers. Because money is not paper. Money is a derivative of your freedom and your understanding of the rules. I am Kyle, and I just gave you the map. Where you go next is your own mathematical responsibility. Before you leave, we must address the lifestyle creep trap, where your expenses automatically expand to swallow every single dollar of your new salary increase. This is the paradox of the high earner who is not rich yet, working harder just to maintain a status that provides zero long-term financial sovereignty. We call this coast fire, where you front-load your investments so heavily in your 20s that the compound interest becomes an unstoppable freight train by your 30s. Your exit plan requires a cold, calculated shift from being a consumer of financial products to being a creator of systematic value. The transformation of Kyle is not just about his bank balance, but about the total deconstruction of every lie you were told since birth. You will realize that most of your social circle is playing a zero-sum game of status signaling. Level 7 requires the courage to be misunderstood by those still trapped on level 0. The 30-year mortgage is not a home. It is an anchor designed to keep your human capital stationary and taxable. We do not buy anchors, we build engines. Stop selling your hours for a linear wage. The math of freedom requires you to decouple your income from your presence. This is the ultimate derivative of your existence. I have given you the 7 levels, the math and the forensic audit. The system relies on your ignorance. Your transformation begins the second you choose to master the plumbing. Welcome to the real game. I am Kyle, and this is where your legacy begins. See you at the top.